the currency crisis no one wants to name. The markets are screaming something Washington refuses to hear. America is sliding into a currency crisis, not a future risk, not a theoretical warning, a present tense reality. And the consequences are going to reshape our politics, our economy, and our place in the world. Ignore the talking heads, look at the signals. Gold just crossed $5,000 an ounce, more than double where it was 2 years ago. Silver has exploded past $100 an ounce, up more than 200% in a single year, shattering price ceilings that stood for more than 4 decades. Rare earth elements are commanding premiums that would have been unthinkable just years ago. These are not speculative bubbles. They are not random market noise. They are a coordinated global flight out of paper promises and into physical assets. When investors across continent decide that they would rather hold metal than dollars, that is not volatility. That is a vote of no confidence. And silver tells us more about what's happening than any other asset, because silver is revealing 2 crises at once. Silver isn't just about money. It's literally infrastructure. Every smartphone contains silver. Every electric vehicle uses it in motors, wiring, and battery systems. Every data center that powers AI and cloud computing depends on it. Every solar panel governments are subsidizing uses it. Modern civilization is built on silver. And here's the problem. We are mining less of it. Most silver isn't mined directly. It's a byproduct of copper, lead, and zinc production. That means supply is constrained by the economics of other metals. And unlike gold, which sits in vaults and can be recycled indefinitely, most industrial silver is used in microscopic quantities and effectively disappear from the supply chain. It's consumed. Gone. For 6 straight years, the silver market has been running a supply deficit. Above-ground inventories are being drawn down. Physical markets have tightened so severely that lease rates spiked to levels rarely seen outside of crisis moments. Exchanges have raised margin requirements to cool speculation, the same playbook they used in 1980 and 2011. This time it hasn't worked. Because this isn't just investors chasing returns, it's manufacturers in the new economy scrambling for supply. Tesla needs silver to build cars. Apple needs silver to build phones. Amazon needs silver to build data centers. When speculators and industrial users are competing for a finite resource that is actually running out, prices don't gradually rise, they explode. And that's what happens when a supply crisis collides with a currency crisis. For 70 years, the dollar's dominance allowed us to buy whatever we needed. We didn't need to control resources. We could just pay for them. That assumption is breaking. When resources aren't available at any price, currency dominance matters less than supply chain control. China understood this a decade ago. That's why it locked up rare earth supplies and implemented export controls. We're learning the lesson the hard way. And all of this comes back to what actually backs the dollar. The dollar hasn't been backed by gold since 1971. We all know that. It's backed by something far more fragile. The full faith and credit of the United States government. And that phrase has always sounded solid, almost constitutional. But faith and credit aren't natural resources. You can't mine them. You can't print them. You earn them through competence, predictability, and institutional trust. And over the past year, we've demolished all 3. Government shutdown threats are routine. Debt ceilings are political weapons. Basic functions of governance are grinding towards dysfunction, and we're adding trillions to the national debt while pretending this is sustainable. The world tolerated dysfunction when America was indispensable. But indispensability requires capability, and we are broadcasting incapability daily. Gold above $5,000 isn't predicting future inflation. It's pricing in present chaos. Silver above $100 isn't speculation. It's the market recognizing that our digital economy depends on physical materials we don't control, purchased with a currency the world increasingly doubts. This also explains something else that confuses people. Venezuela. Trump's actions there are framed as oil policy or humanitarian concern. They're neither. They're about the petrodollar. Since the 1970s, the dollar's global dominance has rested on one simple arrangement. Oil around the world is sold in dollars. That's why we care who controls Venezuelan oil fields. Not because of supply, we can absorb disruptions, but because if oil starts trading in yuan or euros, global demand for dollars erodes. Venezuela flirting with non-dollar oil sales is a threat to the system itself. That's why America First isolationism suddenly turns interventionist in Caracas. We're not defending democracy. We're defending dollar demand. And that same logic explains Greenland. This wasn't a joke. It wasn't a distraction. It was asset accumulation. Greenland is about rare earth elements, strategic position, and tangible resources in a world losing confidence in fiat currency. When paper weakens, nations seek things. Land, minerals, trade routes. The Greenland fixation wasn't imperialism for fun. It was a nation sensing its paper might not be worth what it used to be. And here's where this turns politically dangerous. Currency crises don't resolve cleanly in democracies because they produce panic responses. First comes denial and scapegoating. Foreign enemies, speculators, hoarders, central bankers, trade wars dressed up as patriotism. Then comes austerity. Cuts to programs ordinary people rely on while protecting the powerful. And finally, the most dangerous phase, authoritarian impulses. Emergency powers, capital controls, restrictions on asset conversion, limits on what citizens are allowed to own for national security reasons. Yeah, this sounds extreme until you remember that in 1933, the federal government confiscated gold from private citizens. When governments panic about currency, property rights become negotiable. Internationally, the scramble accelerates. BRICS countries are building alternative payment systems, not because they hate America, but because they've watched us weaponize dollar access. A clear dollar crisis speeds that process up. The dollar won't disappear, but it won't dominate the way that it did.